Perfect. Yeah. Hi, everyone. I'm Simon from Phillips and Byrne, and I'm talking about a topic that has been previously mentioned a couple of times, also on the last panel, specifically DD, and it's kind of getting to be the talk of the town again after the crazy last 2 and 3 years. Funds, it feels like funds are actually doing DD again, and we are experiencing that because more and more funds are coming to us and are asking us to work with them. And we, Phillips and Byrne, I will come to that in a minute, are actually doing something really specific in DD. So we're not doing commercial, legal, tax, whatever is happening, but we are doing tech DD, which is quite a new topic for a lot of venture investors. So I want to start with a show of hands. Who of you, either on the investment or on the company side, has been involved in a tech DD so far? Okay, that's more than I would have expected. Usually it's a little bit less. So that's a good crowd already experienced. What I'm specifically want to speak about today, as we also have some experience, is why we feel, also from data that we have collected across our projects, investors are caring too little about tech, especially in the early stages, and why you should do it, why you should run an audit on your tech, even in the beginning, where you don't have so much tech, where your company may not even have built so much. And now you're going to say, yeah, why should I listen? Why is it important? That's why I first of all want to tell you a little bit about what we do, what Phillips and Byrne is doing, because tech and tech advisory is still that black box that's going on. So I'm a partner at Phillips and Byrne. The company is around 5 years old. As a team, we've around 20 years of experience in tech. And we've done around 500 projects, meaning we both do tech due diligence for leading investors, but also advisory for startups. And we've guided around 15 billion of investment across that journey. And tech DD or tech advisory usually means that we are approaching it from a very strategic level. So we're actually looking not, is your software working in a way, is your code working in a way, or is your code, let's say, good? Because that's not what's making or breaking a startup in a way. But we are looking, are you strategically set up, even in an early stage, from tech to be a successful company, to build a successful product in the market? And that's mostly because we have already, in many of our companies, in the ventures we've scaled, experienced how crazy the influence of tech can be if you get it wrong. And we all, in our team, we have done a lot of these mistakes. We've done a lot of the mistakes that tech can lead into. And we started the company, we started doing that due diligences because we didn't want to have others doing the mistakes that we did. We wanted to have others learning from what we are doing. So first of all, why is tech even important? Why should you care early on? And why investors should also include it in early investment processes. And that's, with the investors, that's the interesting thing, because for a lot of investors, tech is the black box. The startups somehow know, no, tech is important. We are building a tech company. But the investors, it's quite an interesting discussion. Most of the investors would say they are tech investors. They are investing in tech companies. But when it comes to understanding the actual tech, it's still a black box for a lot of investors. They're still quite outside from tech. And then even more when it comes to the impact of tech. Because when I ask investors, hey, how do you feel about the success of that technology at your company? I often hear some commercial numbers. I often hear some market numbers, but I rarely hear any tech successes of startups, of companies. So I've listed 3 typical things that can go wrong when building a tech venture, when building a tech team, when building a tech architecture early on. The first one, and that's actually my most important one because it's my standard example, is that tech will influence your user experience. So if you, let's take a typical SaaS, B2B SaaS company. That company will have some customer flow, will have some technical process that your user is guided on. And however that process is built, the user experience will be crazily influenced by how well the tech in the background is performing. So let's just take a payout flow. that user will be interrupted in the payout flow if it's not coded correctly, if the architecture is not working well. And quite often investors say, yeah, whatever, then it is like this. But then you usually come to a point where I speak to investors and say, yeah, okay, it is like this, but let me ask you, what is the company spending on acquiring that customer? What is the company spending on acquiring a single customer? And usually in B2B SaaS, it's quite expensive. They have high acquiring costs for single customers. And then my second question is, did you track how much churn you had in that payment process because the experience was so bad? Usually they didn't, or they don't in early stages. But then I ask them, track it. And usually you see then that you're losing a lot of customers actually in that process because of the bad experience. And then you can directly correlate it to the costs you spent in acquiring these customers. And if I tell then the investor, hey, you could have fixed this with some investment into tech, if you had just known this, and you would have saved so much money because your acquired customers would have probably converted at a certain rate. Usually it's a very easy trade-off that investors start thinking about doing tech audits early on, investing in actually building good tech even early on. I'm not saying what we hear quite often, yeah, they have some customers, tech will be working because the customers are not really complaining. That's usually the wrong way. The second thing, how tech is really strongly influencing the success of an early stage company is that the infrastructure or the team will not scale. Quite often we see this with more scientific teams, more scientific early stage teams, is that, for example, the team, they may have really great technical co-founders, really great first technical people, but as it often is with techies, these people are not the best people leaders. And when it then comes to scaling fast in your team, scaling fast in the tech team, hiring many people, quite often they realize too late that they should have hired some people managers into the tech team, whatever role it may be. And that can be uncovered in an early tech DD and will save you crazy money on the first hires. And that's what I also mean with the third bucket. All these tech problems are usually rather intangible. It's not really clear how much it costs. It's not really clear how to solve them with money, because it's usually money is only a second order problem. If you have a problem hiring, it's not money that comes in first, but it's velocity of your product. And in second order, you lose clients, you lose money. So a lot of investors have a hard time understanding that they should care about tech early on, because it's usually rather expensive to solve for tech, and it's usually rather unclear how to even attack these tech problems. And that's why you should do an audit, you should do a tech DD early on to uncover these problems, to understand where the problems even are. You can still decide, that's good for now, we won't fix them for now, it's too expensive to fix them for now, but you know that these problems are there or will potentially be there in the future, and you can create a plan to mitigate them in the mid or long term. And that's now where you're seeing great differences, because across these 500 cases that we've done, we have actually seen a lot of difference in investors caring about tech DD. And it's not only about the last 2 years. As I said, the last 2 years were quite crazy. There was investors not doing tech DD, there was investors doing no DD at all. And then there was investors who stick through that but lost deals because of that. So I've normalized the data that we had across the last years. So that's not only an impact of the last 2 years. So what we are seeing in our client base, in the investor base, is that actually a lot of investors spend very little money on tech DDs. And I will have an example on the money side. It correlates with having very little time for tech DD. And both of that is, I mean, to me, I'm a techie. To me, it's rather unclear, because we often experience, and that's the thing, we often experience that the DD budgets are quite big. Legal is really expensive. Sometimes you even do an external tax and finance checkup. And you're actually investing in a tech company quite often. Depending on what it is, it's actually even maybe a complex tech product. And then a lot of European investors, when we speak to them, hey, did you reserve in that amount of deal budget? For a Series A, it's usually around 40 to 60, 70K of deal budget. What did you reserve for tech? And our clients, I mean, they are improving. We are around 20 to 30% that they do reserve for actual tech checkups of tech companies. But quite often with other investors, we are around 10, maybe 15% of what they've reserved for the tech checkup, while a huge chunk of this, and usually around 50% of that, are going to legal and other are going to commercial. So I'd say there's still a lot of room for improvement in actually investing to uncover technical risks, to understand what the risks and what the also potential of the company is you're investing in, because it's mostly tech companies. And what's really important for me also, because it follows through the investment process. Right now, I'm only speaking about DD and the investment process, but what we are seeing quite often, and that's what we are also doing in private equity, because we also serve private equity funds as clients. Usually when you don't do a tech DD in the first place, or do a small tech DD in the first place, you don't really have the engagement point to fix tech problems later, because the company is not really observing that you care about tech. And when you then come in to solve tech problems later on, they will not really accept it. But tech is one, especially later on, is one of the biggest levers how an investor can support their portfolio company, how an investor can help to make the company successful by supporting them on technical things. Once the product market fit is achieved, once commercial is clear, the company needs a lot of help in hiring great technical talent, building the product on, prioritizing features, and building successful technology. So we see that the investors who don't care about tech DD in the beginning usually do a lot less in terms of portfolio support in technical or on technical topics. Now, as I said, tech DD can pretty much solve for all of that. Not all, but most of that. You should do a tech DD, and it can greatly improve your decision and investment process. And that's why you should include it in every deal that you're doing. First of all, it will help you to uncover technical risks, but also legal risks. And that's a second derivative that we have from a lot of deals, is the legal, the lawyers, the legal due diligence coming to us and actually saying, now I understood for the first time how that license topic in a code base work. Because I don't know if you're involved in code licenses, but that's also something you check in a tech DD. And usually, legal lawyers can't really check for that, because it always depends on how the code is actually used in a code base. And that's what we check in a tech DD. Different licenses in different cases can be legal or illegal, depending on the actual usage and how it is done in the code base. And quite often the lawyers then are, that's how it works. We've never seen it that way on the code licenses. So it's also solving very interesting legal risks for many investors. Second, and that's also what a lot of teams like on our DDs, is that actually the tech team is being challenged. Usually that doesn't happen from an investor. Usually tech teams, when we speak to them, are, hey, really interesting that in this investment process, for the first time, somebody's caring not about our numbers, not about our market, not about our go-to-market, but about our tech, and aspiring with us about how we actually are building a great product. Doesn't happen so often, and it's really interesting for them to have this sparring, and also then build the basis for how the team is going to scale tech, how the team is going to scale their technical team and their technical organization in a way that they will be successful doing this. Yeah, and one thing that's really important, if you look into doing tech DD now, or into the topic of tech DD in general, there's a lot of companies out there doing tech DD, as I said, only on code, only in architecture. And we feel that's the wrong way. That's not how you're gonna build a successful tech product, because in tech, a lot of the problems are being interconnected. Meaning, if you build a great organization, and a great product management, for example, if you prioritize well what your engineers are building, then you will also be successful in building great product. Because you can have the best engineers, but if you not give them good input on what they need to build, if you don't do good product management, for example, then they will just do whatever they want. Then they will just build not great products because they don't understand what the customer is actually needing. And you have to solve for all of this. It's all interconnected in a way to be or to become a successful tech company. And that's why we include all of that in our process. And why we not only focus on about architecture, about code quality, but also on the softer topics like leadership, like strategy, and like team culture on the tech side. Yeah, to sum it up, because we are so close to the timing, a tech DD can really strongly support early stage companies, and a lot of investors should care more about tech, should include it in their investment process, because it's right now done too little. And quite often we are called then firefighting. So it's also in our benefit if you do it early on. It's cheaper and it's easier to solve for the problems. Tech can strongly influence the success of an early stage company. A tech DD can prevent this. The tech budget should be increased, or the tech DD budget in the overall DD budget should be increased, because I mean we are all looking into tech companies, and why bother investing if you don't care about the tech? And it can greatly improve your investment process. We also have a cheat sheet on the website. I mean, the link is not really helpful for you now, but if the presentation is shared, or I can also send you a link directly, where it all is summed up, our process, how tech DD works, what you should expect when you do a tech DD, and so on. Yeah, that was it. Thank you for your attention. Any questions? And yeah, happy to answer them. Yeah.
Thank you. Being a lawyer, that's why I'm also involved in technical DD. That's why I mentioned that. And I'm very curious and asking lots of questions, kicking tires.
Yeah.
I see that my clients, investors, and also investee, I've got on them on both sides. I see a lot of pushback.
Mm-hmm.
And the pushback is, you really are looking into my product.
Yeah.
And I'm concerned with confidentiality and disclosure. Now you're going out there and talking to so many investors, so many companies and so on. So I think this is the biggest pushback. I can see absolutely, I can see the how tech DD is essential,
mm-hmm.
but really getting the company comfortable with sharing, you know, lifting the pot.
Yeah.
Lifting the cover on in that pot, it's really very, very sensitive issue.
Mm-hmm. Yeah, 100% agree. That's a sensitive issue, but we solve for that in two ways. So I mean, there's the legal way. We obviously sign an NDA, so it's in terms of just the legal, it's safe, and then also the cultural way. We learned that actually techies speaking to techies, they are quite more open to that, because they realize it's not about somebody stealing what we're doing, but it's more about sparring. So yes, speaking to lawyers, the techies might be, oh, we don't want to tell you, but speaking to other techies, they are quite open in terms of what is actually going on.
Yeah, I mean, my experience has been absolutely, you know, some people are really willing to uncover, let someone into their kitchen, say. But really some companies, especially when they are concerned that the investors might be just shopping around and looking for the information. And my use, of course we have NDAs and so on, but really, you know, that point of getting them comfortable is really, that's what I see as the biggest hurdle, really.
Yeah, absolutely agree.
Yeah, thank
but
you.
But the power is more going to the investors now again.
Yeah.
Yes, in the last 2 years this was a problem. And sometimes we had the case that the company didn't want to show, but now the investors are on the stronger lever again to pull it off.
Yeah.
Great.
Thank you.
Oh. Okay. Maybe. Yeah. Do we have time for?
Thank you.
Yeah.
Sure. So I have this quick question regarding if you can benchmark a startup to their competitors in terms of the tech performance. Sometimes they have claims like their technology is much better than the others, or they're way above state of the art in some very deep tech field.
Yeah.
And how do you go about this by verifying what they build?
Yeah. I mean, you can benchmark some factors. We are experimenting a lot on that. You can benchmark basically code quality, and you can benchmark some architecture factors, some performance factors. But actually, benchmarking tech is usually rather hard because quite often it's in the nuances, it's still a different product. And benchmarking that in technical factors is usually not really helpful, or the numbers, the benchmarks are not really strongly indicative of what's actually happening, because it's still, under the hood, it's still a different product. And so you can't really benchmark too much here based on these performance factors. That's, yeah.
Thank you.
Thank you.